Welcome back to Alpha Recap. I'm glad you tuned in. Markets were closed for the day and we're digging into what moved and why. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. We had a modest session. Nothing dramatic, but plenty of rotation and a few headlines that mattered.
Let's lead with the top line. The S&P 500 ETF finished down about 0.25%. The tech-heavy Nasdaq 100 ETF slipped just under 0.5%. And the Russell 2000 Small Cap ETF edged down roughly 0.3%. That sounds like a pullback, but not a panic. How would you frame the day?
Exactly. It played out more like a rotation than a wholesale sell-off. Investors moved out of a few headline-sensitive, higher beta names and put money into communications, materials, and parts of the clean energy complex. So the losses were broad but shallow.
Sector rotation. That phrase comes up a lot. Walk me through the main themes that drove flows today.
There were several cross-currents. First, cannabis policy risk landed as a clear negative. Any hint that regulatory tailwinds might slow sent those stocks lower, and that pressure tended to ripple through small and mid-caps. Second, communications and media had a good day on M&A chatter and improving ad narratives. Third, materials and mining showed strength as commodity-linked names caught a bid. And finally, utilities were split. Clean energy projects attracted buyers, but companies exposed to permitting or subsidy uncertainty lagged.
Cannabis again, volatile sector. What was different this time?
It wasn't a single new law. It was simply renewed skepticism about the timing and scope of regulatory change. That's enough to prompt a repricing because the group's valuations had baked in fairly optimistic policy progress. When regulators looked less certain, risk premia widened, and those names fell back.
You mentioned communications and media. That's been one of the brighter pockets lately, right?
Yes, advertising recovery, streaming margin talk, and consolidation chatter kept buyers interested. When investors imagine ad revenue picking up or services finding better monetization, those stocks outperform. Today, they were one of the offsets to tech softness.
And materials and mining? What signaled the move there?
Base metals, strength, and selective miner momentum suggested traders were positioning for either stronger global demand or risk to supply chains. When commodities get a bid, it's common to see money rotate into cyclicals that benefit from real economy improvement.
Utilities sounded split. Clean energy projects drew flows, but policy headwinds capped gains. How should investors think about that?
Think of utilities as two camps. Regulated asset plays with stable cash flows held up better, while names dependent on subsidies or with big permitting hurdles were volatile. Investors rewarded visible, predictable cash streams and punished regulatory uncertainty.
On the macro front, the Fed didn't surprise, right?
Correct. There were no surprise moves, and market pricing for the path of rates basically held steady on the session. The Fed remains data-dependent, so upcoming inflation prints and labor reports will be the catalysts that could change sentiment.
So the market was kind of waiting for economic data to give direction. That makes sense. Let's talk about specific names. What corporate headlines stood out?
A few caught attention. Coca-Cola's earnings and its 8K filing drew extra scrutiny as investors parsed pricing power and volume trends. The Cooper companies moved higher, likely on positive clinical or commercial updates. Tesla saw renewed interest after an allocation by a known investor, which can act as a signal even if the capital flow itself is small. Target faced negative sentiment after cutting some office and warehouse jobs, and that weighed on retail peers. Also, filings from Datadog and Fiserv attracted attention. 8Ks can change trading tone even if they don't move the whole market.
There were some more niche stories in the article, private equity and royalty outcomes, and an early-stage food company getting chatter. Worth paying attention?
Yes. Examples like the Vox royalty outcome underline continued interest in alternative return strategies, and early-stage names, like that nutrition-focused company, can spike on speculative interest. Those stories matter to specific investor pockets, even if they don't move broad indices.
Breadth was mixed. How did that influence interpretation of today's dip?
The lack of a big volatility spike and the selective leadership suggested this was a healthy rebalancing more than the start of something worse. Historically, modest tech pullbacks can be constructive if breadth recovers and cyclicals keep finding buyers. But if tech weakness broadened, it could lead to longer consolidation.
Crypto got a quick mention in the note. Anything notable there?
No single dramatic crypto event today, but crypto remains sensitive to regulatory headlines and macro liquidity. The danger is spillover into equities, particularly payments and fintech names. Traders should watch that linkage.
Okay, practical question. What should traders and investors watch next?
First, macro prints. Inflation measures, job data, and regional surveys will shape Fed expectations. Second, Fed speakers. A change in tone can move markets quickly. Third, earnings cadence. Management commentary on margins and demand will matter. Fourth, sector-specific catalysts like cannabis policy, energy geopolitics around Iran, and materials demand data. And fifth, technical levels on major ETFs. Failure to regain momentum could widen a pullback.
And position sizing advice? Any adjustments depending on strategy?
For risk-managed investors, trimming headline-sensitive high-beta positions made sense, and favoring quality cyclicals or defensive names with commodity exposure could help. Growth investors could use selective tech weakness to add to companies with durable revenue and clear margin paths, but they should watch guidance. Income and defensive investors might look at utilities and REITs with regulated income and visible project pipelines on dips.
Summarize the bottom line for listeners. What did today mean in 1 or 2 sentences?
Today was a measured pullback driven by sector rotation. Investors rotated out of speculative, headline-sensitive names into pockets of commodity, communications, and select clean energy strength. The broader picture stayed neutral, while markets waited for macro data to set the next major directional cue.
Quick takeaways for people making moves tonight or tomorrow morning.
Trim exposed high beta positions if you want to limit headline risk. If you're selective, look at cyclicals and materials that gained today. Watch upcoming inflation and payroll data that will drive the next leg of positioning. And whatever you do, keep stop discipline and sensible sizing, because the market was balancing opportunity against headline sensitivity.
That's a clear playbook. Thank you for breaking it down. Before we go, a reminder on resources. If listeners want to dig deeper or ask about specific names, where should they go?
Head to stockalpha.ai to explore our write-ups and tools. And if you have questions about anything we covered today, you can ask us directly there and we'll answer live.
Perfect. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next market close.